What if the future of housing isn't a 30-year mortgage, it's a family relay race? Because right now, affordability is crushing people. Payments feel insane, homes aren't necessarily overflowing on the market right now, and politicians are floating out some big fix ideas, but without any actual details to it. In the next few minutes, I'm going to break down 3 ideas that you've probably heard about: the 401k down payment option, a 50-year mortgage, and transferable mortgages. And then I'm going to talk about a generational idea that other countries have used that may be something we might want to consider here in the future. I'm Brian Quinlan with Daniels Real Estate in the Indianapolis area, and I'm going to break down what's hype versus what's reality and what might be a possibility. So let's talk a little bit about the 3 ideas that have been floated out by President Trump and other government officials that at least showed that they're coming up with new ideas to try and help the housing market, because that is a big complaint nationwide is, well, the housing market, more about affordability. But here are some of the ideas that have been floated. The most recent one is a 401k down payment. The idea here is you can borrow from your 401k without any penalty to be able to use that money towards a down payment on a house. And of course, you would have to prove that you're actually using it for a down payment. Now, for those of you that don't know, a 401k has a penalty if you were to take your money out before the age of 65. You have a tax burden penalty of, I think it's about 10%, but that is on top of the early withdrawal penalty where you are taxed according to whatever your tax bracket is. So you have the possibility of paying 35 to 40% in taxes on the amount that you take out if they didn't waive that penalty in order to use it for a down payment. Sounds like a pretty good idea, because one of the issues that people who are trying to buy a house have right now is being able to save up for that down payment, because it can take a while. Home prices are high, down payments of anywhere from 5 to maybe as high as 20% or more. That can be a lot of money, and it can take people years to get there. The possibility of pulling it from your 401k to have that money accessible right now and not have to save long term for it seems like it's a pretty good idea. The negative, in my opinion, is you're taking away from your future retirement money to be able to buy a house now. Some people would argue that your house over time is going to build equity. And that is how the system in our country works. Homes do increase in value over time. So when you go to sell it later on, years from now, maybe you can recoup that money and put it back into your 401k at a future time. The current plan does say that there's no repayment requirement and it's penalty free. All of that is good. But honestly, if you make smart investments with your 401k, ideally you're going to be earning interest in the realm of 8, 9, 10, 12, 15% on those investments. Equity in a home only grows traditionally at the range of about 4, maybe 5% on a yearly basis. So you're definitely not getting the same return on that investment, except that you can go out and buy a house potentially. Another big issue with this idea, not everyone has a 401k. So it's really only helping those who have a job that allows them to pay into a 401k, or they've made smart investments and a 401k exists, but not everyone has that. And if you don't have the 401k, this is not something that's going to help you at all. A second plan floated out by President Trump is a 50-year mortgage. Now, there are so many factors that go into just the creation of a 50-year mortgage that is not at all something that's going to happen anytime soon. There's a lot of people who want to argue with that because they're looking at it like, oh my gosh, I have to pay on this house for 50 years. Who's going to be in a house for 50 years? Well, whoever thought they'd be in a house for 30 years. And certainly if you go back and look at the history of the creation of that 30-year mortgage, I would bet that at that time when it was created, there were lots of people who were fighting against it because they thought, who's ever going to be in a house for 30 years? That's crazy to stretch it out over that amount of time. Imagine the amount of interest that you're going to pay. All of those same arguments can be put towards the 50-year mortgage. The benefit to the 50-year mortgage is the monthly payments would be lower because you're stretching that repayment out over the course of possibly 50 years. Now, statistically, very few people ever stay in a house for a full 30 years on a 30-year mortgage. So you can go into it with the idea of, hey, I have a lower payment to make because my payments are stretched out farther. I'm never going to be here 50 years anyways. So when I go to resell it, I just pay off what's still owed and move on to the next house. I see the value there. Uh, I want to get back to my original point is that because this doesn't currently exist, legislation has to be passed, finances have to be set up, the banks have to agree to it, got to figure out all of the terms and conditions, and there's just so much that goes into it. I'll be honest, if it ever came to fruition, Trump wouldn't be in office anymore anyways. The third one, and maybe the one that's the most vague, is a transferable mortgage. The idea that right now there are lots of people, lots of homeowners that have an interest rate of 4.5%, 5%, maybe even lower because they either bought their house during the pandemic time of 2020 and 2021, or they refinanced where rates were super low, and they're locked in. They don't want to have to move because now they're going to be getting into a financial state where they're paying a mortgage of 6% potentially, maybe more, maybe less, but that's about where we're at right now. And so the transferable mortgage comes with the idea that you can take that 3.5 or 4% mortgage that you have on the current house and transfer it into the purchase of a new house. Again, lots of question marks here. How would that work? Does everything, does the homeowner have to qualify in order for that to work? Do you have to buy a home that costs less than the current one you're in? What if you want to buy a house that's more? Do you still qualify with that same rate? There's just so many questions there and not nearly enough answers. But as I said at the beginning, at least it's an idea, gets people talking about it. The biggest issue when it comes to homes right now has less to do with the financing, the interest rate, down payment, and all of that, and more to do with availability. We still are millions, and I'm talking 3 to 4 million homes short of what is needed for our housing market to actually become affordable. Because supply is so low and demand is high, and if interest rates drop, demand is even higher, prices will just continue to go up because of the laws of supply and demand. So until something can be done in terms of supply of homes, all of these ideas, while could be helpful, aren't going to fix the biggest problem, which has to do with availability of homes. Okay, but let's talk about an idea that isn't being floated in the US, but might be something that they want to consider in the future, and it's called generational housing. Other countries, and I'm going to use Japan for example, have generational housing where someone gets a mortgage for 50 to 100 years. Now, this is an old concept in Japan, and to be completely honest, it's kind of fading a little bit, but their situation being different than the US. Here's the idea. With generational housing, you have two families. Think of parents and their kids, and together they go to get a mortgage for a house. That mortgage is going to go from 50 to 100 years. Now, when I say kids, I simply mean their offspring, in that these people are in their 20s. They do have to be adults in order to do this. The older family provides stability. They provide income, they provide job security that they potentially have had for a while, and they go to buy a house with their younger offspring on the deed to buy the house as well, because they're working and the qualification to buy the house is based on more on the younger one than the older one, having to do with their current job, what their future prospects are for employment and finances, and they get a mortgage according to that. Now, the big benefit here has to do with what comes later. Living there over time as the older family, the older couple, the older parents, as they start to, whether they retire, they age out, they basically don't need the house anymore or pass away, the quick transfer of ownership is nothing more than the younger people take over owning the house because they're already on the mortgage. Maybe, and this of course it depends on the family. Maybe they've been helping to pay that over time anyways, but now they take over the entire mortgage to work on paying that off. Now, I don't really know the reality of how all that works. Do all the families live together in the same house? Uh, Truly, I do not know the details on it, but I do know that one thing that it does save has to do with inheritance taxes. Here in the US, if you inherit a house, you potentially are going to owe taxes on the increased value of that house since it was built. That is just one of the realities of our tax system. With this particular situation, the new generation takes over for the older generation, and now the payments just continue with no tax implications at all. That can make it easier for younger couples or younger families to be able to get a house, where now we have an affordability crisis, we have an availability crisis, and there's just a whole lot of issues financial wise. This takes care of that. Now, where I said things are different in Japan, this used to be a thing where their financial system was kind of in ruins and families were able to get into this system in order to be able to come up with a way for families to actually buy homes at a time where finances were awful. The land in Japan is vastly different than the United States, and homes in Japan actually decrease in value over time, much like our cars do here in the United States. So over the ownership time of that house, the value of it actually goes down and potentially even down to zero, simply because the land there isn't very good. There's a lot of earthquakes, and so whether the homes are in disrepair or just deteriorated over time, that becomes an issue. And the younger generation that takes over with that long-term mortgage, well, oftentimes they wind up knocking down the house and having to build something new, and that's just a whole nother cost altogether. Here in the US, we don't have that. Here, homes appreciate as long as they're taken care of over time. And so a generational mortgage on a house where a younger generation takes over, well, now they've inherited, and it's not even inheriting, they're taking over the mortgage on a house that has gone up in value. And maybe they turn around and sell it, or now they've got some place that they can continue living or they can move into and live without having to worry about tax implications in the process. So here in the US, one idea that might be something to consider has to do with generational mortgages. Now, I'm not sure if that's something that is 50 to 100 years, but perhaps it's something that people might want to consider if they're having a hard time being able to afford a house, is get onto the mortgage with their parents and ultimately take it over in the future. Are there questions with that idea? Absolutely. I'm not a professional in terms of trying to figure out how to fix the housing market, but it's something to consider. But yes, there are questions. What if someone changes their mind? What if a younger family decides that they want to move somewhere else, either a different part of the state, maybe even out of state or out of country? Then what happens? Does this actually fix affordability or just stretch debt over different generations? And then what about independence? Are we locking a younger generation into having to purchase a house that they may or may not want later in their life just because they signed on for a mortgage? If it meant buying a home sooner, would you sign on for a generational mortgage with your family? Which of these plans resonates most with you? The 401k down payment, the 50-year mortgage, the transferable mortgage, or possibly the generational mortgage? Drop it in the comments because I'd love to know what you think. Thanks for watching.